Hi everyone, my name is Pius Mushiri Mugo. I'm the Managing Director of Nabo Capital. And what we do here at Nabo Capital is very simple. We just take 1 shilling and make it 1 shilling and 20 cents. We create wealth, multi-generational wealth. And that's why I'm very pleased today. I've been invited by Institution of Surveyors of Kenya, ISK, to come and speak to you on this subject of financial management. I must admit, when I was given this subject at the beginning, it's such a wide topic, and I will try to simplify it. And I want us to wear two hats. One is individual, you as an individual, and the other one is your business. I will focus more on you as the individual, and then we can reflect on the business. And I also want to say that this is not just a one-way teaching. I'm also looking forward to hearing from you. So please put your comments and feedback, whatever suggestions on that comment section. If you're on Facebook Live, you know exactly where to do that. And if you're on any other platform, please engage us using the chat function or any other comment section that may be available to you. So I'll dive right into it. As I said, we are here to talk about financial management. And I want to start by talking about myself. About 10 years ago, I met a gentleman. We used to go to the same church with him. Of course, I was an investment professional, and this young man, chases me, and he's like, Pius, I need to see you. And I asked him, what do you want to see me about? And he tells me, I want to talk to you about financial management. And I said, wow, I'm a CFA charter holder, I have a degree in finance. What more can I learn? But I was those were just thoughts in my mind. And I said, you know what, let me hear what this young man has to do. And he said, but I don't want to see you alone. I want to see you and your wife. And I was like, wow, this is becoming a little bit more serious. So we met at my house. And the first thing that he did was to really give us an assignment. I paid 2,000 bob for that consultancy, but the guy still gave me an assignment. And the assignment was to put together our family balance sheet. So me and my wife, we had a nice chat with him. We were very glad. We never felt like we lost our money. We were actually very glad. But that really set the ball rolling for us as a family on financial management. Back to the individual. So I started putting together the family balance sheet. And I was, I had an Excel workbook, and I would put the assets. I have this plot here, I have this shamba here, I have these shares here, and also any borrowings, credit card. I used to go to sleep, and I remember some assets I had forgotten. That's how crazy it was. It became something very intriguing for me because it showed me that there are many assets that we had as a family that we were not tracking. But at the end of it, we had a family balance sheet, and we were able to take our assets, subtract from it our liabilities, all the borrowings that we had, and we came up with this number, net worth. And it made me reflect, because that was like the most important thing I had ever done in my life, to put together our family balance sheet and to know that we are worth this much. If my family was liquidated on that day, I knew exactly how much we would be worth. And I started popping this question to my friends. Do you know how much you're worth? Even in this industry of investment. And I was very surprised that actually very many people, they wake up very early in the morning, they endure the traffic, the sun, and they go to work and they come back home. And when you ask them, how much are you worth? They don't know. And I realized that's a classic mistake many of us we make. But if you ask anyone, and maybe the people who are listening to me, if I ask you, what is the balance sheet size of your company? Most likely you'll pop it out of your head like this. But if I ask you, what is your net worth as an individual, as a family, most of the time you'll scratch your heads. And you cannot be able to do proper financial management if you do not know your worth, your net worth. So the first thing that I want to say, you must know your net worth. So what is net worth? Net worth is all your assets and you minus liabilities, anything that you owe anyone. And when I say assets, it gets so crazy. Even the M-Pesa balance that you have, you've got to put it where? Amongst your asset. Even the Fuliza that you have borrowed, you've got to put it where? Amongst your liabilities. Anything that you have, it must be counted in your net worth. Okay? So, net worth is equals all your assets put together and subtract all your liabilities. So, that is a starting point because it tells you where you are as a family. I've done this with a couple of people. Some of my friends actually have come back with a feedback like, Piers, I actually have a negative net worth, you know? And that surprises very many of them. So, very important exercise for you to do. Number two, when we put together our net worth, something else began to bother me. I started looking at what are those assets doing for my family? What are those assets? What are they generating for me? How much cash are they generating for me? And I categorized myself, my family, in this statement. We were asset rich, but cash poor. Asset rich, cash poor. That is something that many of us have. Why are most of us asset rich and cash poor? Is because we have invested most of our money in land that is not producing anything. You've bought shares, you forgot them. You have bought things that you're not really nurturing them to produce any cash towards your family. So I happened to fall in that bracket where we are asset rich but cash poor. And again, I want to go back. We are doing individual, but also we are reflecting on the business. So most businesses actually don't have a problem with the net worth, but this could be something very interesting. At Nabo Capital, 2-3 years ago, we started focusing on this thing called cash. How much is every asset producing for us? And we've seen tremendous improvement. In fact, if it was not for that, it would have been a very difficult year last year. During COVID, because we focused on cash and we were able to put together a cash buffer that could take care of our expenses for at least 1 year. And that is what makes a business survive. So as a family, how much are your assets generating for you? As a business, how much are your assets generating for you? You start ticking out your dead assets. You start seeing which assets, majority of the people you'll find, only 20% of your assets are actually generating any cash. The rest are just dead assets. So here, the key is to identify your dead assets. Okay? Identify your dead assets. So that's the second thing. What is the cash? How much cash are your assets generating? How much is your net worth able to generate? If you go to borrow, that's the other thing that I discovered. What determines how much you can borrow? Majority of the people, they look at their salaries or they look at their business income. But you cannot borrow based on income. Borrowing should be based on balance sheet. This is what determines if your net worth is, let's say, 10 million, you cannot borrow more than 10 million. You get? That is a suicide move. In fact, you should not borrow 10 million. You should say, maybe I want to borrow a maximum of 60% of my net worth. So these banks that are coming to us and telling us, we have seen income streams, how your cash flow is hitting your bank account, and they give you big loans. Sometimes they mislead us and you end up over borrowing, and therefore you end up with a negative net worth. Okay? So if something happens when you have over borrowed, there's only one way. It's a bankruptcy. So this cash, this net worth, and these two will tell you your borrowing capacity. How much can you borrow? These two will tell you. So those are two things we did. The third thing, this was more of a revelation to us. We asked ourselves, what is the biggest risk we sit on as a family? And it was very clear that my wife was dependent on a salary, and I was dependent on a salary. So if something happened, like for example, the way COVID happened last year, and both of you lose your jobs, you actually can go to the streets very easily. And immediately, we said that is the thing that we want to focus on. So, biggest risk for us was over-reliance on salary. If it is your business, it could be an over-reliance on a particular customer. If that customer goes, you're done. If it is your business, it could be over-reliance on a particular income stream. Safaricom used to make most of its money from voice. But today, that's not where their money comes from. So there must be something that you sit down as a business and you realize, if this piece changed, all our lives would change. So what is the biggest risk that you face as a family and as a business? Very important question. So we said, okay, myself, my family, we were relying on a salary, on salaries. So we made a very radical decision as a family. We were going to rely to use only one salary as an entire family, and the other one would assume we don't have it. And the income that we're going to rely on was a lower one. So we had to reconfigure our expenses, everything, and rearrange ourselves and assume if one salary is taken away, we should be able to survive with a smaller salary amongst us. So even in your business, you need to assume if this client moves away, your largest client moves away, can your business be able to survive with the other clients? That is something that we are constantly monitoring at Nabo Capital. We always look at this thing we call client concentration. Risk. So it doesn't have to be like mine. I'm sure every business has the biggest risk, the thing that keeps someone awake at night. If it changes, everything changes. So I will leave that to you to reflect, and then you can feel this for yourself. So this side is more of a reflection, if I may say so. This side is, we are basically reflecting. Now, this side is where we need to do some actions. We need to do some actions. What is the first thing that you do? Once you realize what your biggest risk is, we set a financial goal. Myself, or rather my family, we set a financial goal. And that financial goal was to assume that we can only live on one income in the family, and we started adjusting ourselves according to that particular income. So the goal here was to win gradually win yourself from salary or client or business income. That's very important. And that is a goal. You set that goal as a business or as a family. Okay? So the first action that you must do, and this one no one can do for you, is to set the financial goal. Set your financial goal. Set a financial goal. A very big, something that will change your family. Okay? Or something that will change your business. The second thing that you need to do, you have to come up with a strategy. And in our language, we call it investment plan. How will you move from where you are today to where you desire to be? How will you move? How will you move from A to B? And this is A is today. B could be 5 years from now. How will you move from the A to B? And this is something that you have to do with an expert. And we at Nabo Capital, this is one of the things that we normally help our investors to do. We understand your aspirations. We know your situation. We know you help us with what are your resources looking like? What is your biggest concern? What is your aspiration? And then we put together a financial plan or an investment plan for you that will tell you how you move with certainty from where you are today to where you want to be. For example, one of our biggest concerns as a family was education. My kids joined a particular school, and that school, when you were given the fee structure, I looked at the projection for 14 years, and we were going to spend 14 million shillings on every child. And that scared me because I have 4 of them. So we can do 14 million times 4. It's a lot of money. So that became a goal. How can we set this education goal? As a family, we want to be able to be assured that we can be able to pay for our children's school fees regardless of what's happening in our businesses, regardless of what is happening in our places of employment for 14 years. And that becomes a goal. So then I asked the team, the investment team, what sort of investment plan do I need to embark on for me to be able to be assured that the education for my kids will be guaranteed? There's nothing guaranteed in this world, almost guaranteed for the next 14 years. And they came up with very interesting statistics. He said, if we invested 8 million shillings per child, 8 million bob, they can pay school fees. It can pay school fees for 14 years. Until grade 12. And then, on the 14th year, these 8 million, what will be remaining in the account will be 7.1 million shillings. Meaning, I'll have only spent from my own capital 900,000 shillings. And my kids would have gone to school for 14 years. Now, imagine the alternative of spending 14 million per child. You become poor. That's why many people, by the time their kids are finishing school, they are poor. But using these vehicles, investment plans, you can actually be able to overturn the tables and you protect your capital, and it's only the fruit of the capital that is taking care of that particular need. And then at the end of the day, you're still left with most of your capital. That is what we call an investment plan. And this can be structured for anything. If you want to buy a car, you want to buy a house, if that is the biggest need that you have, we can put it together as an investment plan. And that was an eye-opener for me, because I realized this is what makes the difference between wealthy people and the people who are poor. Because wealth, and by the way, being wealthy and being poor does not depend on how much you have. It's more of a mindset. The wealthy people, they never, once they have their capital, they never want to lose their capital. They never want to use their capital. They only want to use the seed of the fruit of the capital. Majority of us, if you go and get 10 million shillings today, you even can go and pay school fees for the next 14 years. But you've just lost an opportunity. You get? So you cannot protect your capital, protect everything that you make on a day-to-day basis, on a month-to-month basis, protect it. And this investment plan is so critical in helping you to be able to achieve that particular goal. So this is just an example. So the other goal that we set for ourselves was, of course, to wean ourselves from depending on salary. And I think about 5 years ago, my wife, when she was expecting our third born, she just said, you know what, I think the biggest impact she can have is in raising the family. And she retired early. But that would not have been possible if we had not set what? That financial goal, and we were already executing an investment plan to wean ourselves off depending on that particular income. So even your business, what is the financial goal? What is the biggest pain point for your business? How does that feed into your financial goal? What is the most important? Last year, but one, the biggest financial goal for Nabo Capital was to increase our levels of income to a particular level so that it could take care of every expense and remain with something. You see, so we focused on that for 12 months, and we were constantly executing, we were constantly discussing it week by week. Okay? Your financial goal could be growth. So that could be what you put there as your financial goal. And then you have an investment plan around it. Now, I want to say this about businesses. You know, the most difficult people to preach to are the people who go to church. They're the people who go to church. And this is because they believe that they know God. They assume that they know God. So it is easier to preach to somebody who has never been to church. And in my career, what I've found out is that the most difficult people to invest are the people who are actually successful in business, because they always assume that the business will always be successful. But investment is always there to take care, just in case that business does not come through for you, like many of us, it happened to many of us last year. You must have a plan, an investment plan on the side of your business. Every business, you should set aside some cash. You have an income stream that completely does not depend on your core business. In our business, we call it interest income line. So we have a flow of income that can take care at least 50% of our salaries. Yeah? Even if business does not come through. Why? Because life happens. And when life happens, it does not give you warning. It just comes like that, and it changes. So this is a very special call to businesses. Even if you have you're running a very successful business, please make sure there is an investment plan for your business. So we're done with number 4, done number 5. Now we go to the final one, financial discipline. Investment plan is just a plan. But that plan has certain things that it demands from you. For example, it may demand from you that you must make certain contributions. Regular contributions, maybe to your investment account. You need to make certain contributions to your investment account. That is your business, and also as an individual, you may also be demanded to make certain contributions to your investment account. You can only reap from where you have sown. So if you do not make contributions, then you're not sowing. And if you're not sowing, you will never reap. So one of the most exciting moments for me in a month is when I am making this contribution. Because I normally call it what? Pay myself first. Why pay the landlord? Pay KPLC, pay the water company, pay everybody, but don't pay yourself. If you're not paying yourself, there's only one eventuality. When that life happens, it really happens for you. You get? So you must pay yourself first. Even if you earn 100 bob in a month, you must pay yourself. You must pay yourself. That's why we took a radical move with my wife to say, we will depend on one income. We'll assume one of us has already been fired. You get? Then you depend on that one income. Then the other, what you put aside, because we're tightening the economic belt, you start paying what? Yourself. And how do you pay yourself? By putting it in an investment account. So you put this in, that requires discipline. That's why I use the word discipline, because there are many pressures and many demands on that money. Even your business. When you go close a nice tender, get some lump sum payment, please assume you didn't have some of that money. Get it out, put it in an investment account, and one day you'll be glad that you did that. So, but the key word here is regular. It's got to be regular. It cannot be sometimes. Discipline only comes when it's consistent. So contributions is one of them. Another one is you may need to put in some lump sum amount so that you start on a good note. Okay? If you have. If you don't have, that's still okay. But the key thing you must do, you must put something in that pot so that that pot one day will do what? Will work for you. I was listening to Warren Buffett, and he was saying he spends most of his time reading books. In fact, someone even summarized his life. He wakes up, he reads books, he eats, he sleeps. Why? Because since he was 11 years old, he has had this discipline of putting money in investment. And now he doesn't need to show up anywhere to meet his life expenses. Other people are busy working for them. You get? The largest shareholder in Safaricom does not need to work, does not need to show up. Largest shareholder in Equity Bank does not need to show up at work. People are working for them. That's an investment. So that investment will one day become significant, and you'll be able to wean yourself off from your biggest risk. Okay? So those are 3 key action points. Set a financial goal, then have an investment plan. You can even put it somewhere nicely, that you'll be seeing it, and then follow that investment plan with a very thorough, ruthless discipline. Make your regular contributions. I avoid as much as possible to make withdrawals. There's one thing I like about an investment account. it doesn't have an ATM card. Doesn't have an ATM card. So when you're out there having fun with your friends and you run out of money, you can't run to the ATM card. Yeah? And tomorrow you'll wake up and say, I'm so glad I didn't have an ATM card. That's the essence of an investment account. So I think we've addressed both individuals and businesses. And I would just want to conclude this way. If once you do this and you find you actually, any of these things are missing, you need to start now. Do you know your net worth? If you don't know your net worth, tonight, you should not sleep before. You know what? Your net worth. Do you know how much your net worth is producing? If you don't know, also, make sure you know by tonight. These are things of tonight. This side is tonight. Reflect tonight. Risk. What is your biggest risk as a family? Sit down with your spouse. Tonight. Start now. Isolate that thing, because this is what really moves people to action. The moment we realize that if someone removes the 2 pillars of salaries from my family, that we can be on the street, we move to action. We move to action. So start now, these ones. And then here, you can come and to Nabu Capital, and we'll give you some details, some contact details, and we can help you to put together your financial goals, your investment plan, and also the kind of discipline that you can be following for the next 5 years, 10 years, 1 year, depending on what your commitment or how big your financial goal might be. And then we will meet and celebrate. So that is it from me. And I want to thank you for listening to me, and I hope to hear your feedback, your comments. I'm looking forward to read all of them. And if there is anything, we'll leave our contacts behind, and you can be able to reach us. Thank you so much. God bless.